Hello and welcome. You're watching First Stick here on News9, where we bring to you the morning buzz on the Lal Street. I'm Suyash Maheshwari. With me in the studio, as always, is Amit Ranjan. And it's a Tuesday morning. The markets have once again scaled a record high, with Nifty climbing above the 22,700 mark for the very first time. And with today's gap up opening, the index has scaled fresh record highs in 3 out of the last 4 sessions. But before we get into what's driving our markets, let's take stock of what we got in terms of a handover from the global markets. Amit, over to you.
A flattish Monday, Suyash. All eyes are on Wednesday when the inflation data comes in. Gold held on to its record high, closed 0.4% higher than before. But all eyes are, like I said, on Wednesday when a bigger cue on whether Fed rate cuts will be happening in June or July, or whether there will be 3 or 2 Fed rate cuts this year. A clearer picture. Dow Jones closed in the negative at 0.03%, S&P in the negative at 0.04%, Nasdaq slightly in the positive at 0.03%. European market stock 600 closed in the positive at 0.47%. Hang Seng this morning is in the positive at 0.55%. Nikkei also is in the positive at 0.71%.
All right, and you're right in saying that, Wall Street is sort of adopting this wait and watch approach ahead of the inflation data released tomorrow. According to reports, US CPI is expected to rise 3.4% year on year in March compared to 3.2% in February. Also, let's not forget that the recent data releases in the US have been stronger than expected, and that really has, pushed back the expected start to Fed's monetary easing cycle. Not only that, the quantum of cuts expected by the markets have also come down from about 150 basis points at the start of the year to just about 60 basis points now. But coming back home, things are looking good, if not great. But that really is the time to start turning cautious, right? When the markets are almost on the unilateral sort of rally and everything is moving higher and higher. There is enough and more reasons to be worried about. The global cues are not supportive. Crude prices are on the rise. The bond yields are at the highest since November of last year. We also have the Q4 earnings season, and let's not forget the big one, general elections. So the question really is, should you throw caution to the wind and keep buying the dip, a strategy that has worked out in 2024, or maybe take some money off the table to avoid the choppy ride? But the ride, overall is expected to, be up. But to understand that and, maybe take cues from where we go from here on, because remember, we are in uncharted territory. Let's also bring on board Mr. Sudeep Bandyopadhyay, Group Chairman at Bain Capital. Good morning, Sudeep sir. Thank you for joining us here on News9. And the markets have been on a strong run in the last few sessions. But so far, we are ignoring the global headwinds, coming our way. The crude prices, which are at 6-month high, the bond yields highest since November of last year. What's driving this optimism in your opinion, sir?
Well, I think fundamentally, the Indian macro and micro both are doing well. And there are 2 pockets of growth in the world today. One is US, the other is India. And both the pockets are showing enough and more resilience on the face of, global negative news flows. So while the oil has been moving up, there is enough geopolitical tension. And in spite of that, look at the strength of the US market, US economy, and look at the strength of Indian market and the Indian economy. I think it's quite amazing. But I would like to add to your basket of things which investors should watch is the monsoon. As far as India is concerned, apart from crude oil, which is extremely important, price of crude oil, general election, which of course, I think the market is moving towards a consensus that the existing government comes back with some kind of majority. The other factor which one needs to be cognizant about is definitely the monsoon. I think India still has in monsoon has still a huge role to play as far as Indian economy and markets are concerned. And the progress of monsoon, the quantum of monsoon, the distribution of monsoon, all these will become extremely important. So quarterly results and predictions and actual data on monsoon will be watched, apart from, of course, the general elections, as far as domestic cues are concerned.
All right, and monsoon is certainly be the one to track. I mean, the expectations broadly are it will be a normal monsoon this time around, and perhaps maybe RBI is also waiting to see how the monsoon turnout is before they go on their monetary easing cycle. But sir, we are at the start of the fourth quarter earnings season, and TCS is expected to kick off proceedings this week. Infosys Wipro will come out next week. And I mean, from the IT pack, the bellwether companies at least, most of us are factoring in another weak quarter. But do you see guidance improving this time around?
That's what I believe. I strongly believe that what's going to happen is this quarter will not be anything great. Exceptions will be there here and there amongst the large IT companies. One company may outperform, one company may underperform. But what's happening is, I think from next quarter onwards, things are definitely going to improve. We have seen the worst as far as Indian IT companies' performance is concerned already. That much I'm reasonably certain. So from here on, things will start improving, and we have to work on that. Now, which pocket will benefit most, which segment will benefit most, all that we need to study, analyze, and discuss. But generally speaking, I think IT has seen its worst, and things will start improving from here on. Let's see the commentary, let's see the predictions, let's see the earnings estimate, and the range which multiple companies come out with.
Morning, sir. One sector that has outperformed the Nifty more than others this last 1 month is the auto sector. It has, in the last 1 month, it has gained 5.07%. The Nifty auto against the Nifty gaining only 1.49%. Yesterday, the top gainers were auto firms led by Eicher Motors. The Nifty auto percentage change yesterday was as much as 2.16%. Now, when we look at the auto performance stocks, the stocks that have gained maximum yesterday are the ones that have not gained too much in the last 1 year. But the ones that have not gained, the other auto stocks like TVS Motors, Bajaj Auto, Tata Motors, they have not gained much yesterday. But is it that people are cashing out of those stocks which have basically gained almost 100% in the last 1 year? And the ones that have not gained that much, the people are basically buying into that sort of a dip buying.
You're absolutely right. Bit of rotation definitely is happening in auto. That's the reason why you see people getting out of Bajaj Auto. I think people have made tons of money in Bajaj Auto, and some amount of profit booking there won't do any harm. Same goes for TVS, and Hero MotoCorp on the other hand hasn't really performed that great. So probably some money as far as two-wheeler allocation is moving to Hero MotoCorp. As far as the four-wheelers are concerned, yeah, some money is moving to Maruti, M&M, obviously, and moving probably a little bit out of Tata Motors. Though I must say that JLR numbers were stunning and the performance were excellent as far as JLR is concerned. The numbers came out yesterday as far as JLR is concerned. By and large, if you ask me, I think Indian Auto have been resilient. They have done exceedingly well. M&M has a challenge in terms of tractors not doing great. Eicher Motor has a challenge in terms of the small segment tractors not doing well. But by and large, I think over the performance, whether you look at the SUV, whether you look at the non-SUV passenger cars have been good. Commercial vehicles have done reasonably well. There may be some road bumps going ahead, but as things stand today, things are looking reasonably good.
My question is two-part. One is on commercial vehicles you just mentioned. What do you see the road ahead for companies like even Tata Motors is there, Eicher Motors, Mahindra and Mahindra in the next 1 year post-elections, considering that, like you mentioned, rural demand has been a problem, and whether there is noise with EVs coming in. How do you see this space, the entire auto space, basically performing in the next 1 year?
Well, a couple of things. Let me point out that you're absolutely right. The rural demand has been subdued, and that's the reason you see the tractor numbers haven't been at all impressive for all the players, whether it's an Escorts, whether it's a Mahindra, whether it's an Eicher. Of course, it's a very small part of their kitty. But the numbers haven't been good. And the expectation are that with the monsoon being normal, which is the prediction, and a lot of money moving to rural India on account of elections and other things, I think the demand may be robust coming monsoon season. So they are hoping for a recovery in the tractors. So we will probably see that. And somebody wanting to play that trade, M&M again will be the best bet I would suggest, because there are other parts of M&M are doing very well. Escorts, again, with the change of management, Kubota coming in, it's a changed company, it's a different company, entering Escorts even at current level and holding for long term, absolutely no problem. But as far as the EV issue is concerned, I would like to highlight two facts. One is globally, there is a bit of a slowdown has started coming as far as EV offtake is concerned. India is in nascent stage, absolutely nascent stage. People are just experimenting. Some small numbers are getting sold. There is excitement in the market. There is excitement among analysts. There is excitement amongst companies, and companies coming out with EV are getting disproportionately rewarded in the market. But the fact is, the sheer numbers haven't yet picked up in a manner to write home about. And the way things are happening globally, I don't see the numbers, really going that far in the short term. People are predicting by 2030 numbers may stabilize and things like that. We'll have to wait and watch. While I believe in the transition, while I believe in green energy, I don't think the EV is going to be a revolution in the short term. It will be a gradual transition. Hybrids are more likely the way forward.
All right, and speaking of EVs, there was this very recent study in the US that showed that the resale value of EV companies have drastically dropped. I mean, average price of EV companies dropped as much as 30% on a year-on-year basis, whereas ICE engines just dropped by about 4 to 5%. So perhaps that's also something we need to be cautious about. But sir, moving on, because we were talking about general election, and that is the big theme for India and the markets at large. I mean, I think at this point, most of us are factoring in a clean sweep for BJP. Some are even expecting a 400 plus, seat win for the incumbent government. But do you think, I mean, if there is any disappointment, let's say BJP is only able to rake in, let's say 320 to 350 seats, will the market see correction? And, if you can help us understand what sort of a percentage impact can the market see if there is a disappointment, sir?
Well, Suhash, I think it's all in the sentiment. We know 272 plus gives a clear majority. And that's good enough for governing in a constructive manner over the next 5 years. These are all sentiment, 300, 400, all these are sentiments. And these are being numbers are being talked about quite widely. And of course, if the numbers are not what is being predicted, closer to 400, there may be a little bit of disappointment in the market, but that's just the sentiment. And I think markets will get over that within a period of maybe 1 day or half a day. End of the day, the hard reality is once you have 272 plus, you are good to govern for 5 years. And that's good enough to pass resolutions, to pass bills and everything. So under the circumstances, I don't see too much of a lasting impact on the numbers not coming closer to 400 or whatever, 350 or whatever the numbers people are talking about. I think it's just sentiment.
All right, the impact would be sentimental at best. That's a word coming in from Mr. Sudeep Bandyopadhyay. Sir, thank you for giving us time and also appreciate your thoughts as always.
Thank you.
But, before we go for a short break, let's look at how the markets are doing, because we are climbing up. I mean, the markets, they witnessed a gap up opening, but Nifty as we speak has, pretty much held on to all the gains that came its way this morning. Nifty has made a record high of 22,765 today. We are just about 10 points shy of it as of 10:10 a.m. The number on Nifty is 22,755. Sensex, on the other hand, has climbed above 75,000 for the very first time. It's holding above those levels as well. Currently, we are about 50 points above the 75,000 mark. The mid-cap index is about 100 points off its record high. It's up 0.5% this morning. And the small-cap index is just about, less than 100 points away from its record high. At 16,536, it's up 0.8%. And volatility, implied volatility has seen a bit of a dip. It's down 1% this morning, and at India VIX currently is placed at around 11.5% mark. But there is something, very interesting that is playing out in the market, because we had been talking about how Nifty has been lacking leadership in the last few months, but in the last couple of weeks, we have seen a bit of a sector rotation. Last week, it was Nifty Bank that was driving the markets higher. In fact, most of the returns for Nifty Bank and Nifty came from just one stock, and that was HDFC Bank, which rallied about 7% last week and was, holding the fort as far as Nifty is concerned. This week, we have the metals and auto pack that are leading the charge. Auto pack yesterday scaled a record high, Nifty Auto, and multiple stocks also soared from 3 to 5%. And metals is another space that one needs to keep an eye out. Perhaps since dollar is at an elevated level now, a little bit of a correction over there will mean some good news for metal pack, and we are seeing a bit of a turnaround in the Chinese economy as well. So considering that they are the largest consumers of commodities, metal prices could continue to rise and metal stocks could benefit because of that. But with that, let's slip into a short break. On the other side, Brijesh Iyer of IDBI Capital Markets joins us.
India's ever-evolving urban landscape is witnessing a new revolution. And this one comes on four wheels.
The affluence has been growing. Cars are becoming more a reflection of what you are.
Nobody's talking about hatchbacks. Now what next? The next is the SUV.
The contribution of SUVs is close to 55-60% of the automobile sales these days.
Is that even manufacturers like to sell SUVs?
So, how did a nation obsessed with fuel economy come to love heavy gas guzzling sports utility vehicles? Let's look at how India fell in love with the SUV.
Welcome back. You're watching First Stick here on News9, and we are talking everything markets. I mean, what a run it has been, right? In the last couple of weeks, Nifty has managed to give returns of about 2% and has been moving up, making fresh peaks along the way all through, late last week and this, early this week. But can we get to 23,000? I think that's the big question on everyone's mind. And to answer that, let's bring on board Mr. Brijesh Iyer of IDBI Capital Markets. Brijesh, thank you for joining us here on First Stick. Good to speak with you. I mean, I think we are speaking after a bit of a break. And the going has been good for our markets, right? Buy on dip strategy that has clearly been working out superbly. We are in uncharted territory. 22,700 has been claimed. Can we get to 23,000 in the next couple of weeks, sir?
Good morning, Suresh. So, if you want to see 23 in the next couple of weeks, yes, that is quite possible, because that is the next level what we are watching for. But then precisely for this current week, I believe 22,800, that is the mark which we believe during the start of the week that can be the probable upside. To 22,800, there can be some resistance might come, resistance in the sense of profit booking, because the derivatives data, the put call ratio is slightly at the higher side. So 22,800, some profit booking cool off might see during the week. But then if you speak of another 2-3 kind weeks, then definitely I believe 23,000 plus levels can be seen. Bias is quite extremely positive. 22,400, 22,200 remains the lower side support as well as the demand zone. So I think if there is a small correction in profit booking, one should look to add long trades, because the bias is strictly extremely positive.
All right, and Nifty Bank has played a huge role in this drive up. And Nifty Bank, we had spoken about it. I remember last time you said that once 48,000 is broken, we'll see a quick move up towards 49,000 levels also, and that has pretty much played what's played out. We are nearing that 49,000 mark. I mean, 50,000, is that possibility anytime soon?
Yeah, I think directionally Bank Nifty is poised for 50,000 definitely. So the way way I spoke for Nifty at 22,800, the same level for the Bank Nifty is 49,000. So a slight profit booking close to 49,000 is possible, but then directionally Bank Nifty is points for 50,000. In the weekly time frame, the last week when the Bank Nifty has seen a close, it has clearly given a triangular pattern breakout in the weekly time frame. So definitely that momentum will be seen over the next few weeks. So buyers is extremely positive. Immediate support, the breakout point was 48,000. So now I believe 48,000 is going to act as a support zone. And 49,000 should also be easily taken out, but some hurdles will be seen. But I have a sense that 49 will also be taken out, and 50 should be the immediate levels to watch for.
Now, Bain Capital, the Boston-based equity firm, is offloading shares, as many as 3.34 crore shares in Axis Bank through a block deal, a sale that is of the tune of $431 million. Now, this is the second offloading of shares in Axis Bank that Bain Capital has done in the last 3-4 months. In December, it had offloaded as much as 1.1% of its stake in the bank. The size of that deal was 3,400 crores, and it had sold that at over double the price at which it had bought the stake in 2017. This time, the offer price is at a discount of 0.5%. When I look at the Axis Bank stock, not a very big performer in the last 1 month, the gains have been actually in the negative. What do you make of Axis Bank? Is it a big dip to buy on, or is there something else? Even in the last 1 year, only about 27% gains.
I think it's a dip on buy, because if you see the structurally, even though there was a selling in the Bank Nifty, it has not performed. It has never broken the demand zone, or it has never came below these support levels. So all this while when the Axis Bank was correcting, even if I do look when the Bank Nifty was not performing, it never broke 200-day moving average, and the mark of 200-day moving is 1030 level. So it has respected those points. So I don't think there is any near-term weakness. And if one has to believe that Bank Nifty has to rally 50,000, so somewhere Axis Bank has to contribute to that. So whatever the previous level, 1150, 1160. So I think that levels will be seen in Axis Bank if Bank Nifty goes to 50,000. So definitely as a trader, I would be willing to take a buy trade in the Axis Bank.
All right, and another stock that is likely to see a block deal today is Gland Pharma, Brijesh. According to reports, 2 entities linked to former promoter are likely to offload 150 million worth of shares via block deal. The block deal is being launched at a floor price of 1725 rupees per share, which is about a 7% discount to yesterday's closing price. And looking at the stock yesterday, it rallied by almost 6% after this the company got a nod from US FDA for its generic breast cancer drug. The volumes were also quite good, Brijesh, but this morning we have reversed all the gains and then some. The stock is down about 5-6%. I mean, do you think it will take support at the block deal floor price of about 1725, or will we see more correction from here on?
If I purely look from the charts perspective, Suresh, then I think there has been a distribution over the last 1 month. During the entire series of March, there has been selling in the counter. And I think yesterday, before the news, there was some good tick, but then buying some good signals were there. But then that thing is entirely taken down today. And if I look from the technical, if I see the averages, then it is pointing downward. So 1700 is likely to be broken in the near term. So definitely this doesn't remain a buy pick. I can sense that 1700 might be broken, 1650, 1600. This would be the range where this may get settled. So once we see those levels, then we again review and understand whether is a good trade setup or something like that. But right now at this structure, definitely I believe that there are high probability that 1700 will be broken down.
Gland Pharma likely to break 1700. But Brijesh, what are your picks for our investors today?
Yeah. So my pick is one second. So it's more of a trading and a positional bet. So Gujarat Gas is a trading bet. I think it's giving a range breakout. So one can go long at the current price, but the stop loss would be 552 for the target of 610. The one can also take this position in the FNO space also, because we have an entire month now. So I think it's look quite promising. Next one is PNC Infra from the cash mid cap space. It's a little bit of larger time frame. One can go long at current price with the stop loss of 441 for the target of 545. Some 15-20% kind of a returns can be seen in PNC Infra. So it's a little longer time frame. Then again, escorts. Escorts is something which we are again looking from the month's point of view. I think we can easily bet for 15-20%. It's very good. It's a falling channel breakout. From the technical perspective, RSA is one of the indicators. It's giving a range breakout. So the delivery volumes are quite good in escorts. So escorts buy at the current price for the target of 3,300. And lastly, one more the trading pick is Bharat Forge at the current price with a stop loss of 1136 for the target of 1,300.
All right, those are the top stock picks from Rajesh Iyer. Gujarat Gas, PNC Infra, Escorts and Bharat Forge are on his radar for the short term. Sir, thank you for giving us time here on News9. Always a pleasure speaking with you.
Thank you, sir. Thank you.
But before we wrap things up, let's take a quick look at where the markets are, because Nifty is very close to that 22,750 mark. It is holding above the 22,700 levels, which we claimed for the very first time in today's session. Sensex is also up 0.36% as we speak, holding the fort above 75,000 mark. The mid cap and the small cap index, they opened on a rather flattish note, and yesterday we saw a bit of a correction play out in the in the mid cap space from the higher levels. But this morning, and by the way, that could have been expiry related, because Nifty mid cap select expiry was yesterday, so perhaps that added to the price pressures. But this morning we are once again witnessing a surge in the broader markets. Nifty mid cap is up 0.45%, and this is as of 10:25 a.m. this morning. The small cap index is up 0.75% as well. So overall the setup is looking rather positive for the market, but there are enough and more reasons to be cautious about. Remember, the headwinds from the global markets, I mean, they are rather something concerning. Crude oil prices are at a 6-month high, bond yields are at a 5-month high. Also, we have a lot of uncertainty coming in our way, because we are entering the quarterly earnings season. Also, we have elections in the next couple of months. So there are enough and more reasons to be cautious about. But overall, the going has been good for our market, and the buy on dip mantra has really worked out. On that note, let's end this show. We'll see you at 4 p.m. on Last Check, but up next is World Business Report.